Hey, it's Tom here and welcome back to the channel. Now, last week Alibaba hosted their 2021 Investor Day. It is a day where basically some of the top executives at Alibaba get up and present around various aspects of the Alibaba business. We know that Alibaba primarily, at this stage at least, is really bringing in most of their revenue and most of their profitability from their e-commerce businesses, and they have quite a diverse basket of e-commerce businesses. But we also know that they have other investments and a cloud business and the Ant Group stake and so on. And there's really quite a lot kind of going on under the hood with Alibaba. So this is sort of a chance for those executives to get up and focus on some of their highlights from how the business has performed over the last year, and also some of the key things that they are kind of focusing on moving forward. So in this video, and this is probably going to be a two-part series on the channel, I basically want to give you a summary of some of the presentations and my kind of personal highlights. So in this particular video, I'm going to focus on the CFO presentation. So typically this is done by the Alibaba CFO, Maggie Wu. Maggie Wu is actually about to step down from the CFO position. So she did sort of the first half of the presentation, and then the second half was done by the current deputy CFO, which is Toby Zhu. And Toby is intended to take over from Maggie Wu as the CFO once she steps down from that position at Alibaba. So it was a really interesting presentation. They covered basically some of the high level numbers coming out of the e-commerce business. They talked through quite a significant change in the way that they're going to do their financial reporting for their e-commerce businesses, which I think is a huge positive in terms of getting more transparency about how each segment is kind of performing with e-commerce and Alibaba. They also talked about capital allocation as well as their philosophy on starting and growing new consumer-focused businesses. They also talked a little bit about competition and also about the cloud business and some of the things that they're doing there. So that is kind of the plan for this video. And then in part two, we will do basically the CEO presentation. Daniel Zhang being the CEO of Alibaba. He did a fully separate 45-minute long presentation, which we will make kind of a part two in this little mini series here on Alibaba. So that's the topic for today's video. Before we get into that one, we do have a sponsor for this video, and today's sponsor is Hatch. Hatch have been my personal broker of choice for me as a Kiwi, making all of my US investments for more than 2 years at this point. And one of the main reasons that I initially switched across to Hatch was really because of fees. I was previously paying $90 a trade with one of the big banks here in New Zealand to buy into US companies, buy shares in US businesses. And I can do those exact same trades now for as little as $3 in Hatch. And they've continued to kind of improve the platform as long as I've been a customer as well. They've recently launched kids accounts in 2021. So if you want to start a account for your kids, investment account for your kids with even lower fees than the traditional Hatch accounts, you can now go ahead and do that and get the snowballing and compounding of wealth started really, really early. So if you're interested in checking out Hatch kids accounts or Hatch more generally, you'll need to go to the link hatch.as/investingwithtom. If you go to that link, sign up, deposit $100 or more into that account, you'll get a free $20 top up so that you can get started investing with a little bit more money. Okay, so the presentation here, initially from Maggie Wu, starts off with basically an overview of some of the high-level numbers of the Alibaba e-commerce business. And basically, anytime I look at these numbers, they do kind of boggle the mind a little bit, just how large this company really is and how much business they do. So they gave some highlights of the growth in annual active customers over the past 12 months, actually from September 2020 to September 2021. And basically, that number has grown from 1,035 million annual active customers to 1.238 billion annual active customers. So quite a significant jump up year over year in annual active customers. And basically the breakdown of that is still very China dominant, as kind of expected. So in China specifically, that number has gone from 827 million annual active customers to 953. And internationally, that's had quite a significant growth as well. So off a smaller base, of course, but it's gone from 207 million annual active customers in September 2020 to 285 million in September 2021. So despite all the headlines that you may see, Alibaba is still trucking along really well and growing at a significant clip. And our revenue for the fiscal year from those businesses is up 41% for 2021. Now, if you've been following Alibaba closely, you'll know that that full amount of growth didn't all flow through to the bottom line. And some of the pressures around competition are something that Toby Zhu got into later in the presentation, so we will get to that. But that's kind of the revenue story, I guess, for Alibaba for the year. Now, Maggie Wu then went on to touch on the cloud business, Alicloud. So this is something that a lot of investors really are paying attention to. We've seen the massive dominance of the American cloud businesses, which is really down to a very small number of quite dominant players now. So of course in the US we have Amazon's AWS, Amazon Web Services, we have Microsoft Azure, we have Google kind of up there as well, but after that it really kind of falls off a cliff to a large extent in terms of the competition. It really is dominated by a small number of players, and there's a lot of investors in Alibaba who are quite excited about potentially Alibaba having that same prospect in Asia. So in terms of what the cloud business has done over the past 5 years, the growth has just been astounding. So they talked about only 5 years ago when they started presenting about Alicloud, the business was doing about 1 billion RMB per quarter in revenue, and it was loss making. It was losing money, not contributing anything to the bottom line for Alibaba, the sort of group. It was actually detracting from the bottom line, right? We're burning cash at that kind of scale. But in the past 5 years, that 1 billion RMB per quarter in revenue has now grown to about 20 billion RMB per quarter. So it's up 20 times in the last 5 years in terms of revenue, and it's just now getting to the point where it is starting to become profitable as well. So that's a really exciting development for Alibaba. And although they are the market leader in China in terms of cloud at the moment, the China sort of cloud industry is sort of a lot further behind where the US players are. There's just not as much demand for cloud services just yet, but obviously there's some very long-term tailwinds in place for that industry. So if Alibaba can continue to have great market share and become one of the key players like Microsoft or an Amazon have been able to do in the US, that's obviously going to become a very valuable business over time. And finally, from Maggie Wu, a really big change in the way that e-commerce business performance is now going to be reported at Alibaba. So we're getting basically a lot more granularity about the individual segments of the e-commerce businesses at Alibaba. So they've now split it out into basically 4 categories. So we're going to, moving forward, we're going to see China commerce, we're going to see international commerce, we're going to see local consumer services, and we're also going to see Cainiao, which is basically their logistics business. And from each of those business segments, we're now going to be able to see revenue and some kind of profitability metric. I know Alibaba is a fairly extensive user of a financial term called EBITDA, not to be confused with EBITDA. There's a T in there, so I suspect that's probably the main sort of profitability metric we're likely to see out of these e-commerce businesses. But in my view, that's a really positive development. We're going to be able to get a lot more into detail around how each of those business segments is performing. Obviously, Alibaba's e-commerce business is enormous and it's very wide ranging, so to lump those all into kind of one total e-commerce business segment I think is probably not as nuanced as you can maybe get when you're trying to analyze the business as an investor. So it's going to be great to get that level of detail now. Okay, so moving now into some comments from Toby Zhu, who is the current deputy CFO at Alibaba and is about to become the CFO at Alibaba. So the sort of lead into this presentation from Toby Zhu were some last kind of final comments from Maggie Wu around capital allocation. She said there's basically kind of 3 factors that are considered: importance to the long-term strategy and goals of the Alibaba group, market potential and scale, and sustainable growth. They're sort of the 3 areas of focus for Alibaba to start allocating capital towards a new line of business. And that led Toby Zhu to then basically talk through how they think about kind of phases of growth for each of their lines of business. We know that Alibaba over time have basically continued to pump out new subsidiaries and new, spawn new businesses, I guess as Monish Prabhu might say, very consistently. They're doing it all the time, and this is the way that they kind of think about growing each of those new businesses. They essentially break the life cycle of each of those businesses into kind of 3 different categories. They have the seed phase, the traction phase, and the profitability phase. And each of those phases has kind of different priorities. So they said in the seed phase, and this is specifically for consumer-focused businesses, I should say as well, that they mentioned, they said in the seed phase, basically all that they want to do is grow user scale and mind share. They're really trying to scale as quickly as possible. They're not so concerned about short-term profitability. Obviously, long-term profitability is a very strong focus at Alibaba, but initially, for a lot of these businesses, they really do need quite immense scale for them to be profitable long-term anyway. So that is kind of the initial focus, is just to grow the user base and grow the mindshare as fast as possible. After that, they move to what they call the traction phase. So that's kind of the point where they've got a substantial user base and they now want to start growing the transaction volume and the order numbers and GMV from that customer base. So initially they get the customers on board. Secondly, they want to retain those customers and ideally continue growing the customer base if possible. And then they want to basically increase the average spend that a customer makes. And this is a trend that we've seen over a very long period of time from business lines like Taobao and Tmall, which are kind of the 2 beasts at Alibaba, the 2 really big e-commerce sites. So that's the second phase. And thirdly, they want to basically focus on profitability. So once they have the user base in place and they've been able to start really growing the average spend from each of those users on a particular consumer-focused site, then they're looking to profitability. And this is the point at which, if they do continue to grow, they're really going to be much more focused on profitable growth. We know that a lot of businesses, particularly right now, are just kind of growing for the sake of growth without kind of too much attention being paid to the actual long-term economics of those businesses. So they said that they're really only interested in long-term profitable growth once they reach a certain scale. And therefore that means that some of the bigger businesses that sit within the Alibaba group have quite different priorities to some of the newer, faster growing businesses. So they said Taobao, for example, the focus at this stage, because it is so large and so dominant and it's been around quite a long time, they said the focus at Taobao is more around maintaining leadership through better product supply and faster shipping for customers and so on. But they said a site like Taobao Deals, kind of a spin-off of Taobao, is still in the seed and scale phase. So the focus is not yet printing cash flow and profitability from their business. It's still trying to get scale so that they can have better long-term profitability from Taobao Deals. Now, interestingly, competition was mentioned a lot throughout this presentation. There have been, slowing growth rates a little bit in many of Alibaba's businesses. We saw profitability take a hit, largely from a lot of the investment portfolio for Alibaba. But competition was mentioned a little bit, and there were some really interesting comments. It sort of was something that reminded me a little bit of the seed phase that Alibaba had just talked about. But also some of this, I kind of get the feeling that there's some kind of just wild spending and stuff going on that doesn't make a lot of sense as well. But basically the gist of what I got from Toby Zhu was, when he was talking about competition, was that they said that competitors are scaling their spending and as a result oftentimes the losses in their business, basically in an effort to grow as fast as possible, and that has impacted some of Alibaba's businesses. And Toby literally said, the best defense in our view is offense, and they're trying to combat these smaller competitors that are popping up really, really quickly by being equally aggressive in terms of trying to give some benefits back to customers themselves as well. Now, 2 final things I want to touch on from this presentation. There were a couple of short comments on Alibaba's logistics business, which is Cainiao, and I'm sure I'm butchering the pronunciation for that. But I was really interested to hear basically about a lot of the investment that Alibaba have made in automation. And when I was first looking into Alibaba sort of earlier in 2021, I saw some pretty cool videos actually floating around the internet of some of the automation that Alibaba have been putting in place with this particular logistics arm of the business. So I'll try and overlay some videos here just so you can see kind of what's going on there. But that's going to become a really powerful asset over time for Alibaba. Obviously, the name of the game in e-commerce is to get great products at a great price to the customer, and ideally get them there really quickly. And Alibaba again has a range of different products that they sell. So some of the goods are really time sensitive. Maybe it's food or fruit or vegetables or something, and they have to get to the customer really quickly. Maybe some things like electronics or something are a little less time sensitive, but they really are dialing in and trying to become hyper efficient in terms of how they get a product from the moment it's purchased to the end kind of customer, really efficiently and cheaply. So that was something that's really cool to see. And interestingly, that sort of logistics network has actually been leveraged by third-party businesses, as they described it. So it does seem that that's kind of opened up to other operators, and I think that's an important advantage for Alibaba as well. We've seen some of the crackdowns from the CCP more recently around this whole banning of the choose one, not two kind of policy that Alibaba had in place, where some of their merchants were selling on only Alibaba when they really wanted to sell on a lot of other sites to obviously try and grow their businesses. So the more that Alibaba can just have a more attractive value proposition for merchants on their sites through things like improved logistics, I think that's that's a significant kind of needle mover for Alibaba. So one final thing I want to touch on again is Alicloud. So Toby Zhu also had some comments on the Alibaba Cloud business and getting into a little more of the specifics with the growth and where that's kind of coming from for the cloud kind of arm of Alibaba. So they said they had 37% year-over-year revenue growth from Alicloud, which is huge. It had been trucking along about 50% a year, but they lost quite a big customer in ByteDance, which is the owner of TikTok, if you're not familiar with that. But even with that, they were able to grow 37% year over year. And interestingly, they said they now have 49% of their revenue coming from non-internet industries. So, the cloud business isn't just full of, tech businesses and so on. They also have less tech-focused businesses who just need kind of good IT systems, I guess, in their companies. So that was interesting to hear that 49% of the revenue now coming from non-internet businesses. And they also talked about kind of scaling R&D spend over time. And this really reminded me a little of the whole Nick Sleep scale economy share kind of model that you might see at an Amazon or at a Costco or something, where basically anytime there's an efficiency gain in the business, that's immediately given back to the customer. And I'm kind of the view that this is a really good way to tackle it in the case of Alicloud. Although Alicloud is dominating the China cloud sort of space at the moment, I don't think that it is at all a given that they will still be dominant in 5 or 10 years. It's far earlier in that race to cloud dominance in China than it is in the US. And Alibaba have been pretty aggressive in terms of trying to give the best cloud service at the best possible price that they can to the customers. So they basically said, any time that they grow the business, they're able to spend a little more on R&D, which means that they can increase the number of services offered to the customers, cloud services offered. They can also decrease the cost per service as they kind of scale up, and they're immediately kind of giving those cost benefits back to the customer in the form of just straight up lower prices, but also in the form of higher R&D spend in the Alicloud business. So it's kind of this flywheel, which is a term that gets thrown around way too much, but that's kind of what they're trying to make here, where if they can increase R&D spend, they can then increase the number of services they offer to their customers, which means they can drop the cost per service and also continue to spend more on R&D, and the whole cycle kind of repeats again with developing new services at a lower cost, which means they can spend more on R&D and develop new services at a lower cost, and kind of get this thing going around and round and round, and hopefully we've got huge dominance from the Alicloud business in maybe 5 or 10 years time. So that is part 1 of my Alibaba Investor Day highlights. Keep an eye out for part 2, where I focus more on Daniel Zhang's CEO presentation to investors. If you want to check out the original webcast, by the way, that will be all linked down in the description as well. So you're welcome to go ahead and check that out. But that's it for me for this one. If you're interested in the Hatch offer, you'll need to go to the link hatch.as/investingwithtom. If you did enjoy the video, please hit like and hit subscribe, and I will see you in the next one. Cheers.